Welcome to Conversations. I'm Muqtedar Khan, your host, and today I'm going to talk to you about India's third quarter performance. The reports are in, and they look very positive. It appears that the Indian economy is bouncing back after troubling dive in the second quarter. So, if you all remember, the second quarter had initially been reported as 5.4% GDP growth rate, which was a huge drop from the previous year. And there were a couple of explanations offered for it. One was that because of the elections, the government could not spend much in capital expenditure, and therefore, because of less government spending, it seems according to Indian election rules, governments are not allowed to initiate major projects at the time of the elections because it will look as if they are offering some kind of a quid pro quo in exchange for votes. And therefore, because the government expenditure at that time in the first quarter was very low, so the second quarter, basically, the growth rate dropped to 5.4, which has now been corrected to 5.6. So the actual growth rate for the second quarter, which would be July, August, September, was 5.6%. And now it is reported that the third quarter GDP growth rate was 6.2%. The predictions were, especially by the Reserve Bank of India, was about 6.8%, but it has come in at 6.2%. A lot of other banks and other economists had predicted around 6.3, 6.4, 6.5, but the actual number is 6.2. It is less than anticipated, but it is much, much better than the third quarter. So you can safely say that the Indian economy is bouncing back. Not only that, but because there is growth, there's an uptick in growth. You could argue that what happened in the second quarter was an aberration and not indicative of the trend of Indian economy. We will talk a bit more about that, but before that, please subscribe to Khanversations, like this video, press the bell icon, and don't forget to share this video with your socio-political network. And to all of those who are watching Khanversations, I want to wish you all a very happy Ramadan. May this month add spiritual depth to our souls. So when you fast, when you pray, please keep me in your mind and in your hearts. And also pray that Khanversations continues to prosper. So coming back to the Indian third quarter report. The report is India is growing at 6.2%. It is a drop of nearly 2.5% compared to last year. So this is for the year 24-25. India's financial year runs from April to March. So while this is fourth quarter in terms of the calendar year, it is third quarter in the financial year. So in the previous year, 23 to 24, India's growth rate was 8.6%. And this year, it is 6.2%. So year to year, you can say there's a significant drop by nearly 2.5%. That is a huge. 8.6% was a spectacular growth. It was like China. But 6.2% is really bad compared to last year, but compared to last quarter, it is significantly better. It is nearly 0.6% growth increase. Not only that, it also suggests that whether it is developed countries or developing countries, India is still the fastest growing major economy. There are other developing economies which are doing well, like Indonesia, but they are around 5%. China has also recovered significantly, but its growth rate is hovering between 4 and 5%. So yes, while there is some improvement in developing world, in the global south, India remains the fastest growing major economy, whether it is in the south or in the north. So that's good news for those who are at the moment holding cash and not investing in the Indian markets or Indian businesses. There are three primary reasons why the economy has suddenly began doing well. The first one is pretty obvious. The government spending has increased by more than 8%. in this quarter. And that is the primary driver of India's GDP growth. And in fact, for the last 20 years, whether it is India, whether it's China, whether it's any major country, GDP growth is often driven, and I'm not just talking about GDP, I'm talking about GDP growth, is often, it correlates with government investments in capital investments in infrastructure, and other places. You could invest in health, you could invest in research, but as long as government is spending, the economy is growing. So the government spending has definitely increased in the third quarter, and that is one reason for the primary growth. It is expected that India might grow with it by at least 7.5% in the fourth quarter, which is we are nearly there. So January, February, March, the expectations are that India will grow at a much higher rate. And one of the reasons for that is the second reason why India did well in the third quarter. The third quarter, India also saw an uptick in consumer spending. So things like cars and others have sold way more than in the first term, in the second quarter. So the consumer spending has grown significantly. As a result of that, there is some kind of optimism and buoyancy in the market. And so people are doing significantly well. And so the consumer spending, which has gone up, is one of the reasons why the economy has come back. So that is good news. FMG, what are they called? Fast moving consumer FMCGs also have shown an uptick in sales. So the middle class is now suddenly spending money. It's not clear why, but one reason could be because of the reduction in taxes. The tax cuts that the government announced in its budget may have prompted the middle class to go out and spend on cars and fridges and stuff like that. And therefore, consumer spending has gone up. Lots of people who have been asking for a review of the third quarter since the results were announced yesterday have suggested that it might be because of the Mahakumbh, but I think the Mahakumbh spike, if there is a spike because of it in GDP growth rate, it will show in the fourth quarter, not in the third quarter. The third reason why there is a bounce in the Indian economy is because of agricultural growth. So the growth in agriculture sector was 5.6%. So that is good. So there is two things that are happening. There is an increase in consumer demand in the rural areas, and that obviously correlates with agricultural growth. So the agricultural growth is 5.6%, and the manufacturing, unfortunately, which is 17% of India's GDP, which is very low for a country which has aspirations to become a dominant economy. And so the growth rate in the manufacturing sector was only 3.5%. It is more than the second quarter, where it was only 2.1%, I think, if I remember, in the second quarter. But in the third quarter, the manufacturing grew only by 3.5%. If you look at it, it is nearly half of the overall growth rate. So it is bringing down India's GDP growth. So the agricultural sector is doing well, rural sector is doing well, and they go together. If you notice that we've been telling you that one of the things that has happened in India's labor market is that nearly 6 million people, 6 crore people have moved into rural jobs, have left cities and migrated back to the rural areas. And as a result of that, there are more people in villages than in the rural economy. And so there is, fortunately, there is growth, so there is demand. Now, there are implications for that. This imbalance in growth with regards to agriculture and manufacturing has an impact on India's desire to become Atmanirbhar. So with regards to the industrial side of the Indian economy, the Prime Minister of India has been constantly talking about the importance of India becoming self-reliant or Atmanirbhar in the defense sector, in technology, in manufacturing chips, et cetera, But that doesn't seem to be showing in reality. There's a lot of talk about it, but there is no significant growth. And In the recent budget, the government has created some concessions to encourage small and medium scale industries. We will see whether it has any impact on the share of manufacturing. Manufacturing is only 17% of India's economy. So if you look at it compared to the agricultural sector, India does not look like a developed economy at all. Most developed economies have very high percentage of their economies coming from service and then from manufacturing, and then the least from agriculture. In the India's case, its service and agricultural sector contribute a lot more than manufacturing. And that is the weak link in the Indian economy. And it has even defense-related implications. So if India is spending a lot of money on importing weapons, which it needs given its security challenges, both in South Asia as well as in the Indo-Pacific, and now India is going to be buying a lot of weapons from the United States because of the recent understanding between Prime Minister Modi and Donald Trump. So it does two things. One, that India will be spending a lot of money abroad importing weapons, and given the fact that dollar has become more and more expensive, it will be a huge expense. But the second thing is, the more India imports, the less there is investments in developing indigenous capacity, indigenous industry, and indigenous research. If you're going to be buying assault rifles from the United States, and if you're going to be buying armored vehicles from the United States, then there will be less money left to invest in research and manufacturing at home. And even if you manufacture at home, I'm not very sure that very soon you will be able to produce the quality of weapons that will be comparable to that which is provided by the more mature industries in the United States. India has also shown some increase in exports. So the exports have increased by 2%, and imports are down, and the trade deficit is down. So the good news is that the trade deficit is down. But the trade deficit is down because of that India is exporting more and importing less. And it is partly because of the growing, shall we say, weakening of the Indian rupee. So the dollar is becoming more and more expensive, and the rupee is becoming of lower and lower value in the international market. So Indian exports are becoming cheaper, which help exports, but imports become more expensive, and therefore it reduces imports. So if trade deficit is shrinking because of the declining value of rupee, then it's not a positive thing. Trade deficit should decrease because you're importing less, because you're becoming more self-reliant, and you're exporting more because you're producing quality goods. So that kind of shrinkage in deficit is what we would like to see. And finally, I do want to talk a little bit about the headwinds, which are going to be challenging, because while there is optimism suddenly in the Indian economy because of the growth of the third quarter report, because a lot of people were nervous. What if the report was 5.9, 5.4%? Then it would create a bad impression and less confidence in the Indian economy. So what are the headwinds? So one of the positive things going forward in the fourth quarter, besides increase in consumer spending, which is, I think, somewhat connected to a reduction in taxes for the middle class. So I think that's a tailwind which is going to help the Indian economy and definitely increase consumer spending. I don't know whether it will. One of the weaknesses in the Indian economy is lack of private domestic investments. So people are either borrowing money to buy things, and the savings are also down. And there is a segment of the Indian population which is heavily invested in stocks, but it's a very small percentage. And I will talk about the stock market shortly. But what is important is that the consumer confidence perhaps is coming from reduction in taxes, so they have more money to spend, and they are spending it on consumer goods, and which has definitely contributed. So I think that will continue in the whole of 2025, in the fourth quarter and subsequent quarters too. we will see what happens. But there are lots of headwinds that Indian economy is going to face. Number one are the Trump tariffs. If the reciprocal tariffs, as Trump has threatened, really kick in, then India's exports are expected to drop by 7% at least. It's not much. It will be about $8 to $9 billion, but it will drop India's exports, and that would also reduce in bringing in dollars to India. The second thing is that the decline of the rupee is going to continue to hold the economy back. So, for example, if today India's overall GDP is around $4.3 trillion, but if the rupee, instead of being today the rate of rupee to dollar is 87.47. That's what it was when I was recording this today on March 1st. So, but if if the dollar was, say, 60 or 65 or 69, as it was in 2014, then India would already be a $5 trillion economy. So the decline of the rupee also reduces the size of the Indian economy when measured in dollars. So that also works as a headwind. And besides, India is expected to increase its defense spending and its imports, especially from the United States, as a result of the pressure that is coming from Donald Trump to reduce the trade deficit, which is around $50 billion. So India has a $50 billion advantage over the US in terms of India's imports from the US are $50 billion less than India's exports to the US. And therefore, to bridge that gap, India is expected to buy maybe more oil, more gas, more weapons, maybe even F-35s going in the near future. And if the rupee continues to decline, all of these are going to have a negative impact on the Indian economy. So these are some of the tailwinds, headwinds, which are going to slow down the Indian economy in 2025. In the last quarter, one of the features of the Indian economy has been the steady drop of the stock market. For example, Nifty has gone down by close to 17%, 15 to 17%. So about 15 to 17% of wealth has been lost on the stock market. And people don't think that the stock market has hit the bottom. So it's quite possible. The expectations are that the correction is going to be about 20%. So the stock market is expected to fall further, which means there's a lot of wealth that is going to be lost. But what it is also doing is reducing the confidence of foreign investors, both institutional and private. So we have seen a lot of foreign, what do you call it, FIAA, foreign institutional investors. They have withdrawn a lot of money in October alone, about $11 billion worth left the Indian markets and investments. So private investors and institutional investors have been taking their money out of India, which suggests that they are either not getting the results that they want, the returns they want from the Indian market, and then the money is mostly going back to the US or to China again. Once again, China is attracting more private investors. So the money is being pulled out of India and is going to China and back to the United States, where the economy until recently was doing very well. So one thing that is happening is the flight of the capital. And that will definitely have an impact on the GDP growth rate, because then there is no, then the economy will have to rely entirely on government investments, because if there is no local private investments and foreign private investments, then it will have to be either foreign direct investments or through government investments. So that is one challenge, along with the weakening of the rupee, which are going to be challenges besides the tariff war, which is going to be international. Even if India escapes serious damage, we don't know what tariffs on Europe, on China, on Asian countries, and then their reciprocal tariffs on the US what they're going to do to the global economy and how that will impact India's exports and imports in 2025. We won't know that. Probably I'll talk to you again this is March, April, May, June. Perhaps in June, we will get a much clearer picture of what is going to be the impact of Donald Trump on the global economy and also on India's growth rate. And so this is the scenario I wanted to share with. There is optimism because of 2 or 3 reasons. One, optimism is because consumer spending has gone up. People are feeling a bit more confident, and there is more government expenditure taking place, as we can expect to happen in the near future. And then there are the negatives, obviously, decline of the rupee, as well as tariffs. And there are some weaknesses which we will discuss some other time as to why India is not really replacing China in the supply chain. Now, if you recall, the mantra of Indian economy these days is Viksit Bharat, the goal that Prime Minister Modi has set for India to become a developed country by 2047. In order for India to become a developed country in 2047, which is 22 years from now, India needs to grow at a minimum of 7.8%. So it's like a run rate in a cricket match. You have to score at a rate of 7.8% from here in the next 22 overs. But this over, India is expected to average about 6.5% in the year 2024-25, which means India is scoring fewer runs than it should in this over. So that 7.8 becomes a bit higher. So every year that India misses the target of 7.8, subsequently the rate at which India needs to grow in order to reach the target of becoming a developed high-income economy by 2047 will become less and less likely. And as economies become mature, their growth rates drop, like you've seen in the case of China. It grew for about 3 decades at around 9%, and now it is doing around 4 to 5%, and it is barely become, its per capita is on the boundary of high income and upper middle income economies. So some people say that it has escaped the middle income trap. Some people say that it's still stuck in the middle income trap. So that is something that happens. All major economies are growing at less than 3%. So India really needs to grow at 7.8 or more for the next 22 years to become a developed country. So anyway, I hope you found this discussion of India's third quarter useful, interesting. So please subscribe to Khanversations, like this video, press the bell icon, and don't forget to share this video with your social political network. And please support Khanversations by becoming a member. And the way you become a member is by joining the channel. If you don't see the button to press join, look at the description of the video. I have posted a link there. And if you click the link, it will take you where you can become a member of the channel. So until next time, I am your host, Muqtedar Khan. Take care.